Good day Forex trader. Your USD Forex signal, consolidation above $1.1301. Today's your USD signals. Risk 0.75%. Trades may only be taken between 8 a.m. and 5 p.m. London time today. Short trade idea. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1394. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1301 or $1.1229. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote last Thursday that we had a medium-term bullish picture, with the price finding support at the $1.1234 level and then at $1.1305, confluent with the round number, and the price was making a bullish consolidation there. It seemed poised for a further advance. I thought that the best approach would be to look for a long trade from the next bounce at $1.1305 and that the resistance level just below $1.1400 was very likely to hold over the day. I was a little wrong, but not by much. The picture now is largely unchanged. We have continued to see the price mostly consolidate with low volatility. Forex markets in general have done little this week because the market is waiting for two things: Friday's US CPI, inflation, data release, and more clarity on the likely impact of the Omicron coronavirus variant. As we are unlikely to get any major data on Omicron for a few more days at least, although very early data is arguably encouraging, the price of this currency pair will probably move little today. Despite the lack of direction and volatility, it can be said that we have seen a bid in the euro over the last day or so, and so it may well be that the short-term bearish retracement ends with a bullish bounce at the support level, very confluent with a round number, at $1.1301, so a scalp from that price if reached could be a nice trade opportunity today. We may also be seeing higher support forming at $1.1316. I also think the price will be extremely unlikely to break above $1.1400 today, so if that round number is reached, there could also be an opportunity for a short scalp. We will probably see a lot of action in this currency pair during tomorrow's New York session. Gbp Usd Forex signal, Plan B directives to push pound lower. The pair will likely continue the downward trend as bears target the second support of 1.3095. Bearish view. Sell the Gbp USD and add a take profit at 1.3095. Add a stop loss at 1.3250. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3265 and a take profit at 1.3350. Add a stop loss at 1.3200. The Gbp USD pair crashed to the lowest level in more than a year as the number of COVID-19 rose in the UK and as investors braced for strong US inflation numbers. The pair declined to a low of 1.3160, which was the lowest level since November last year. New UK COVID-19 rules. The UK has seen a significant number of new COVID-19 cases in the past few weeks. These cases are mostly among the vaccinated and the unvaccinated people in the country. Also, most of the patients are suffering the Delta variant while a growing number of them are having the Omicron variant. Therefore, there are signs that the UK will move to more restrictions in the coming weeks to curb the spread of the virus. Media reports said that Boris Johnson will announce a move to Plan B measures. These measures will include vaccine passports and an order for most people to work from home. As such, investors believe that these restrictions will disrupt the strong recovery of the UK economy. Most importantly, they believe that the Bank of England, BO, will sound a bit dovish when it meets next week. Before the new outbreak, most analysts were expecting that the bank will sound a bit hawkish. Indeed, some were expecting that the bank will signal that it will hike interest rates in the coming months. Later today, the Gbp Usd will also react to the latest initial jobless claims numbers. Economists expect the data will show that the number of claims dropped from 222k to 215k last week. This is the same range that the number was before the COVID-19 pandemic. On Friday, the UK will publish the latest GDP numbers while the US will release inflation numbers. The latter will be the key movers for the pair since they will have an impact on next week's Federal Reserve decision. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair has been in a strong bearish trend in the past few weeks. The pair declined to a low of 1.3168, which was along the first support of the standard pivot points. The bearish trend is also being supported by the 25-day and 50-day moving averages, MA. It is also below the descending trend line that is shown in black. Therefore, the pair will likely continue the downward trend as bears target the second support of 1.3095. Aud Usd Forex signal, bullish comeback still intact. The pair will likely keep rising as bulls target the 50% retracement level at 0.7273. Bullish view. Buy the Aud Usd pair and add a take profit at 0.7273. Add a stop loss at 0.7100. Timeline, 2 days. Bearish view. Set a sell stop at 0.7100 and a take profit at 0.7000. Add a stop loss at 0.7200. The Aud Usd pair rally fizzled out as focus shifted to the upcoming US inflation data scheduled for Friday. The pair is trading at 0.7165, which is slightly below this week's high of 0.7180. It is still about 2.5% above the lowest level last week. The Aud Usd turned higher this week after the Reserve Bank of Australia, RBA, concluded its 2-day meeting on Tuesday. The meeting came at a time when Australia is still battling the COVID-19 pandemic. In its statement, the bank sounded optimistic about the economy even as the number of cases rose. The main change in the meeting was that their bank removed a guide to start hiking interest rates in about 2024. It replaced it with a statement that it will be patient on interest rate hikes. The bank will also continue with its quantitative easing policy until February. The next key mover for the Aud Usd will be the latest US initial jobless claims scheduled for later today. Analysts expect the data to show that initial claims rose to about 214k last week. These numbers have fallen to where they were before COVID. The data will come a day after the Bureau of Labor Statistics published the vacancies numbers. The US has more than 10 million vacancies while the number of resignations has been on an upward trend. On Friday, the US will publish November's inflation data. These numbers are expected to show that the country's inflation rose from 6.2% in October to 6.7% in November. This will be the highest figure in more than 3 decades. Core CPI, which excludes the volatile food and energy prices, is expected to rise to about 5%. Still, there are signs that the country's inflation is peaking. Aud Usd Forecast. The 4-hour chart shows that the Aud Usd pair has been in a strong bullish trend in the past few days. It has risen by more than 2.5% even as the US dollar has gained slightly against other currencies. The pair has found resistance slightly below the 38.2% Fibonacci retracement level. It has also moved above the 25-day moving average and is between the middle and upper line of the Bollinger Bands. Therefore, the pair will likely keep rising as bulls target the 50% retracement level at 0.7273. As such, any drop will be viewed as a buying opportunity.